Hey, good morning, everyone. This is Mark Yagi here, just giving you a quick update on Palantir. And yesterday and the day before, we had some really bad action. You could see this stock got all the way up to like 125 and just over the last couple of days because of CEO Alex Karp making weird comments and selling some shares. We are having a pullback on the stock. Now listen, the stock went from 20 to 125, so it's like a 6x. Just in the last few months. But, even these big high flyers that everybody thinks are going to go to the sky, they pull back, right? And so you could see about 2 weeks ago, we had a big gap up on earnings up over this $85 level, and it made this gap here, right? So I drew this line for that gap. Now you could see it go all the way up, and these people were thinking, oh my God, I made all this money. But up at the top, people start to take profits, and they look for an excuse to take profits. And so that's what's going on here with this stock. So you could see it's dropped on huge volume and then increasing volume yesterday after the first drop, right? It went all the way down to 95. That's a $30 drop from 125. That's like a 20% drop. That's pretty big. So you got to watch out for these big volume days. So here's what's going on. Here's how I read the chart. So you've got this gap on the chart, and gaps get filled. And so there's this gaping hole right here that it got into it yesterday, right? And it bounced up and closed at like 105, 106, something like that. And now it's trading pre-market around 108. But it wants to go down there and fill this gap. There's too much selling pressure for it to be able to stay up here and make a consolidation, I think. So it's probably going to come down and fill that gap. If it does that, and that's right at the 50-day moving average, it could bounce, right? There's a good chance that it'll bounce. Now we get new sellers that are waiting for an opportunity to get in to buy here at that breakout spot, at that gap spot. The gap gets filled, all the risk comes out, they think. But what happens is once that gap gets filled, it takes the next swing point and puts it in play. So the next swing point is the swing point down here at 63.40. And so now that swing point is in play. I don't even want to talk about this swing point here at about 45 bucks because there's a gap down here on earnings a couple of quarters ago. But let's stick to the realistic here. It's going to fill this gap, I believe, and then if it does that, hopefully it bounces off the 50-day, and then Bob's your uncle as we start to build this consolidation and go up higher. I kind of don't really know what they do. I know that sounds ignorant, but there's some smoke and mirrors going on with Palantir. Now they got some government contracts. They're supposed to protect individual privacy and all that stuff, but it's a little hard to figure out exactly what they do. If you start digging under the covers, you start to go, wait a minute, what do they do? Where do they get their revenues? How do they make their money? How are they doing? It's a little weird. Anyway, just throwing that out there. It's probably not enough to alarm you, but just do your research. Anyway, I want to show you what happens with these high flyers, and I'm going to show you that by looking at NVIDIA last year. And NVIDIA went from 50 to 100 gazillion last year, 50 to 150. That's a triple. It went actually higher than that, or a higher percentage gain than that. But anyway, just looking at this chart, you could see 40, 50 bucks up to 140, and then people started to take profits. Now notice this gap. I put this line here on this chart to show you. There's a gap. It gapped up again, filled that little gap. You see that? Filled it. I maybe almost filled it, but went all the way up to 140.76, and it's had a lot of trouble staying at 140.76 ever since, right? It's trying to test that right now. But it doesn't matter what's going on right now. What I want to show you is that gap got filled. And as soon as it got filled, it took off and went the other way. And so these gaps, you've got to notice them on the chart. I know this may be voodoo for some people. And I know we don't think the gaps are going to get filled. But it's really weird if you look at charts long enough, and I think I probably looked at 1 million charts in my life now. You're looking at gaps sitting all over the chart that get filled. Now, you might forget about them. They might be 2 or 3 years old. This gap is fairly recent. And it got filled, right? It went up, went down, and then a couple months later it came down, filled the gap, used that as an excuse to bounce back up, and now it's above its 50-day moving average, blah, blah, blah. So when you look at Palantir, you have to kind of notice, look, that gap to me is obviously going to get filled. Obviously. I have no idea, really, I'm not Nostradamus. But to me, studying enough charts, the pattern recognition in my brain says that's going to go to 86 bucks. Went to 95 yesterday. 86 is not that much farther down from where it is now. We get a bad market for a couple of days. This thing's dropping. But that 63.40 is sitting there looking at us because that's a little bit of a support level back up off the 50-day moving average back then. So you've got to watch the charts. I know you might think it's voodoo, but I think, if you don't study charts, you don't get the benefit of repeating or learning from the things that happened in the past. And so I want you to repeat the pattern. I want you to be able to see it. And if you could see it, maybe you can make some money on it. All right. And then what I would do if you're doing covered calls, which is what we talk about in my programs, is I would start doing deep in the money calls. The deep in the money amount, the in the money amount protects you on the way down, so you don't lose money if you're deep in the money. If you're sitting there trying to think it's going to bounce and you're going to sell the 125s, well, you're going to get not much juice for them, and you're not going to have any downside protection. And to me, this thing is going down. That's how I would play it. And so you need to be selling, the 95s, the 90s, maybe even the 85s where that gap is, so that you can make some money on the way down, protect yourself on the way down, still get a little bit of juice, but not have your account decimated because of all these sellers. I'll see you on the next video. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.